All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. This is the free weekly swing trade report. We're going to touch on two sectors here to start the week that have picked up and are coming off bottom formations, and that's solar and cybersecurity. Now, we've had a change in trend in 2017. It started with big tech and a little bit of biotech, although it's pulling back today. And now we've had some of these other sectors following. Solar's here, FSLR tends to be the leader here, and you can see for a while now, going back to March 2016, this is the last time we actually traded it, it's been in a downtrend. And all of a sudden, we got this huge pickup in volume to the downside, which is usually a bad thing. But this might be a capitulation event here. We got rocked from 75 down to 30. And now we can see here, we've had a little bit of an uptick in volume, and we've broke some key levels here. Finally broke the 9 after trending down, going back to November. Broke this trend in here, broke the 9, and now have broke the 50-day moving average. So we've got a remount here, and that's exactly what we're looking for. We've got a good 7 or 8 points here till we hit the 200-day moving average, which would be a key level for a complete reversal. But what I'd like to see here is one of two things we can play this. One is a pullback and then a show of strength. So we want to make sure that this isn't completely failing here. So I'd like to see a little strength before entry or a break of this recent level here. So if we get up over 36. So two ways to play FSLR. Our next solar stock, CSIQ, a little more thinly traded here. The pattern is not quite as strong, but still we had this big pullback down and we've remounted these key levels. Now for this one, I'd want to take out these highs here. Get up, say, at 1325, and you've got about a 1.5 points here to get to the 200-day moving average, which is good for a stock of this price. And we could add another one here, JKS, which is consolidating in a tight range, a break of maybe 1640, and we've got to move potentially to 18. So 3 good solar plays here. Now let's hit cybersecurity, and the one we always go to is cyber. Cyber has made a huge run from 45 to almost 53 here. We've got a range here at 55, and then another range here at 58. And then if we were to pull this back farther, there's some highs here, even higher, all the way to 75. But more near term, we've had this big run. This pullback here is not really that concerning. Anytime you get a big run, at some point you're going to get some profit taking. That might be what we're seeing here today. So again, pullback and then show strength, or a taking out of recent highs. One of these two things. Right now we're in pullback mode, so we want to see this pullback slow down and then reverse itself. And when it does that, we can get in. Ideally, this happens right here around these key moving averages, the 50 and the 9. So that's what we'll be watching there with cyber, and then one more here at FAY. Similar pattern, not as extreme, but we've made this run from 11 to 1350. Now starting to pull back here, and we've got a resistance level here, which corresponds with price action here, just under 15, maybe 1475. Again, we'll look for a pullback here, and let's add one more to make it 6 stocks here. Pan W. This one here, we've got a gap range to contend here at 143 and some moving averages, so it's a little tough with these resistance levels. But if we take out these moving averages, this could get in here to 143 and even into the gap. Or if we pull back and hold, we could try to even play pre-moving average break. We do have some volume coming in, and we had another capitulation event here. So cybersecurity, solar, they're not gimmies yet. We got to see these patterns emerge, but definitely 6 potentially actionable setups that you can be watching for. Be patient, stock them, pay attention to when they report earnings, and when the setup triggers, don't be afraid to take these. Report. I'll see you guys next week.